kyriba.com, and we'll be able to take your questions offline. If you're having any technical issues, please dial the number listed on the screen. This webinar will be recorded and will be posted to Kyriba Social by the end of the week. And you'll be able to find all of the Kyriba Tip and Tricks webinar series on Kyriba Social. So if you weren't able to join us for one of our previous sessions, be sure to find them on there. And with that, I'll pass today's presentation over to today's presenter.
Hey, thanks, Elena. Hey, so good morning, everybody, or good afternoon. My name is Tom Gavigan. I manage the North American pre-sales team here. I did last week's session in this series related to cash flow scenarios and using the application to help in generating our forecast based off of various scenarios. And again, today's topic is going to be related to being able to then use the system from a forecast variance tracking perspective. I've been with the group and company here for going into my 4th year and kind of seen the evolution specifically on the forecasting and the addition of this tool. Just for you, those on the phone that are looking at kind of and understanding, okay, well, what parts of Kyriba am I using today? What parts is this going to be applicable to? Obviously, what you're seeing here are all the various modules of our application related to the treasury functions that I'm sure almost all of you are probably using. Payments tracking, and then our added capabilities related to, say, risk management, supply chain finance, and our most recent kind of evolvement on the compliance and fraud management capabilities. Today's focus really is just on the forecasting, though. So basically leveraging that part of the solution and the tools provided in there. But keep in mind, right, the data from other areas of the application are, of course, impacting our forecast and going to be applicable as we look at tracking the variances and changes to that over time. So, information related to derivatives that we might have in place and how that looks in our forecast, information related to our debt and investment holdings and how that's impacting our forecast. That information obviously flows into here, but again, right now we're just going to be inside of these modules of Kyriba. So what that will do is we'll transition into the system. What you're seeing here, obviously, is the application kind of stepping in and working from the beginning here, just like you guys kind of logging into the application and immediately coming upon and entering into my landing page, which does give me some of that information related to our balances and kind of where our current cash is sitting related to our different legal entities, where those balances are trending and expected to be based on the forecasting, which is the topic of discussion here. This topic is really a culmination of all of the prior sessions that we've gone through over the past few months in this series. So if you're questioning, okay, well, how do I get to a dashboard? I mean, we have a recording on that. If you weren't able to join, and you can guide and review that through Kyriba Social, you can start building those things in. From here, what I'm going to do is actually go into the workflow that we're going to use for today. And again, this was another topic of our discussion over the past couple of months, is how do we construct and build a workflow? And this is just the example of my cash manager's workflow, where I have a set process of doing my daily positioning and reconciling those, and then ultimately using and putting a workflow in place to helping establish and build our forecast, and then track that forecast and do any sort of analysis thereafter. So that's going to be where we're focused at here today. Where we're going to start is kind of looking at the forecast variance tool, and we'll go and kind of rebuild things so you understand how all the pieces, I guess, fit together, and how everything kind of comes out at the end of the day in this variance worksheet. So within this workflow, you'll see here that I have a tile. It says it's my forecast variance tracking worksheet, and by clicking in on that, what it's going to do is it's going to load in and show me what that worksheet looks like currently. And we'll break this down and rebuild this in this session here. So what you're looking at is the variance worksheet, and there's a lot of ways to structure this and set this up, which we will look at. But in my example, what I'm doing is if I'm managing our Canadian operations, our Mexican operations, and our operations here in the U.S., I have my various kind of buckets that I forecast off of. So these are your budget codes in Kyriba, and I'm able to see what did I originally plan for, as you can see here, in the months of October and November. So what were we forecasting, what were we expecting, and what were we planning related to these different areas in which we forecast for? And then what actually happened? So what are the actuals? This is the bank activity, and then I'm able to understand and be able to see, where were we off? And this is a very simple view where we're just showing kind of two data sets, if you will. Again, a forecast and then an actual. This is looking over a consolidated period of time, as you can see here, depending upon is that, this given couple of months, is it over quarter to date or over the past 6 months or something like that. You have the ability to kind of dictate, well, what's the time frame that I'm using to evaluate my variances? And again, I'm using these 2 months here as my point of comparison, looking back into those 2 months. Now within this, and as we set this up, depending upon how you set it up, it gives us the capabilities to drill down a little bit into sub-periods. So we'll set it up so that we can set up, different time buckets, if you will, but those sub-periods could be each day of that forecasting period. So if I'm forecasting short-term kind of daily views, I might actually go in and actually see, well, what were my variances day by day? Alternatively, I could do something of variances by week or by month. That depends on how you want to set that up. But I could actually come in and say, well, just show me the variances that existed for, in my example here, maybe the 8th of October. And what I'm doing is, instead of looking at the net variances over this time, I'm just going to drill down into that date or that time frame. And it's going to get rid of all the other information, just show me the information relevant to that time. And now what I'm doing is I'm seeing, here's what, again, what did I expect to happen? What actually happened on that date? And then here's those variances for just that time. You'll notice that there is a bucket here that is highlighted pink, and that's highlighted pink for a reason, in that this tool gives us the ability to actually enter comments and explain things. So the same thing that you might do in Excel when you're adding a comment to a field there, we have the same capability. So inside of this worksheet, by right-clicking, I have the ability, as you can see here, to add a comment. And that'll allow me to actually include information and offers a little bit of accountability into the system. If various groups or subs are managing this, right, well, we could have them kind of go into the system and explain if there's a variance, why that variance existed. And you can see here that a given person or user of the system had indicated that there was a late payment that we weren't planning for, and they can actually offer the comments and explanations to that. This gives us the ability to add reasons as well. So if I am that person, I can go in and add the explanation here. You can see that it gives us the capability to add kind of canned reasons, if you will, which we can then report on afterwards. So bucket those things, I wasn't aware of this fee or wasn't anticipating this fee. I have a bucket of, again, missed forecasts. I could have late payments, early payments. Those could be specific classifications that you could adjust and kind of add to. So if I come back to my view here, I'm back onto, there's a list of explanations, and then I'm back onto where we were starting. Additionally, within this worksheet, when this is built out, there's another couple other things that we can do. So not only can we look at things in aggregate, not only can we drill down into different sub-periods, but as you can see up top, it gives us the capability to also review things more in a summarized way, as well as in a graphical view. So as a summary view, what this does is it takes out all of the detail in terms of the budget codes and the breakdown of those, and it says, well, go to these different time periods. So I'm looking each week over week over week. I want to know, for instance, well, how much was I off for that week? So I was basically 35% was over in terms of what was I anticipating for this first week of October. Now we can go in and look at actually the daily breakdown of that. However we structure that breakdown, which we will look at here and build this out, we can really kind of set this up the way we need to. But ultimately, this gives me possibly that ability to know and track and keep tolerances, right? We want to maintain and be sure that we're within a 30% tolerance of our forecast, or whatever that might be specific to your organization. And we can do that as each of these sub-periods. I can know net, that I was just about 8% off over that time frame, and use this to measure, right, and to readjust as you're going back and doing your forecasting for next period, taking things into consideration here. So what I want to do now is, okay, we're looking at this information and looking at the variances, and before I do that, I will just show you the other view here, which does give me that graphical view, where now I can see, again, just two data sets in this example. Those data sets being the pie, or the bar there is going to be my forecast, so what did I expect? And then those lines, that line graph is going to show me where I am in relation to that, just giving me more of a visual indication in terms of where that might be. This is information that can go to your dashboard. Tying this into where we started out in the beginning, we can add these things to the dashboard, so upon coming into the system, we're able to see that. So just keep that in mind. So what I want to do is kind of simulate something, right? Let's build out a forecast. Let's add a new variance, and let's kind of see how that looks. Because within this tool, if I just go back to the original view here, what we're doing is we only have two data sets. We have, again, the original forecast. We have the actuals. This worksheet actually allows us to compare not only this, which is quite common, right? What happened versus what did I think was going to happen, but also multiple versions of a forecast. So if we're continuously evolving our forecast, this will give us the ability to say, well, let's plan our forecast here for Q1 of next year, and then maybe in a few weeks we'll adjust that. So let's just see what that adjustment might look like, and this tool gives us the capability to do that. Let's play that game. Let's do that. Let's kind of adjust our forecast and add this to it, so we'll kind of see a comparison of what was I originally planning, what was my updated forecast, how does that look in comparison to what actually happened, what actually occurred there. So I'm going to come back to my workflow. Before we build that out, we're going to add some data into the system. So we're going to simulate kind of a forecast. And of course, that's always going to be different. There's different ways that all of you on the call here are doing forecasting. A lot of different methods that we can leverage. If you want to talk about the ability to create the scenarios and the models, go back to what we talked about last week on our tips and tricks. There's a video on that in terms of how to establish and leverage the scenario tool. I'm going to take a little bit of a different approach here today, and I'm going to integrate data in. So there's going to be always in your forecast, right? There's information that you're getting in from someone else, from other groups, and from your ERPs and so on. So what I want to do is I want to integrate and bring data in. Now, this is going to be a little bit of an added bonus for you guys on the call here that you might not know this. Let's just assume I'm building out or I'm redoing my forecast or kind of updating that forecast. So what I have right now, obviously, is a blank screen. Now, we've always had the ability through the data exchange to import data in, right? So we can import a spreadsheet into Kyriba or upload that into the application. Recently, in recent releases, we've offered the ability to actually take worksheets in Excel. So as an example, I have this Excel workbook here, and you can obviously see that I can structure this kind of how I want to, but I can have my accounts, and then I'm forecasting off of the type of transaction, the dates. You can see the amounts over here, and then I'm just going to go over to the left where I can obviously also apply that budget code that we're going to use. So you can have this kind of, as much information obviously as you want here, but I'm just going to keep it very simple. What I'm going to do is if you take the information from Excel, you can do a Control-C, which would let you copy. And if you come back into your worksheet here, into your view, or into your cash position worksheet, when you're drilled down into the cash flows themselves, if you do a Control-V, we'll actually add those transactions that way. So rather than upload the file, you can use the more maybe intuitive way of kind of just copying data, pasting it into here, and then by clicking the check mark, what I've done is I can then add those cash flows. Those are now going to be integrated into the forecast, right, with the other data that we're working off of. So that's another method, another way that you can leverage the system to do that, so to get data into your forecast here. So that's going to be what I've pulled in from Excel, maybe what I've collected and consolidated and played with, and okay, I'm going to bring that in as you can see. Now, we might be relying upon other organizations or other groups, subsidiaries giving us that data. If I continue on through my workflow, I can use our cash flow table to actually see that information and maybe more in the application make changes to that. So this is just those cash flows that I've just imported in. Leveraging the cash flow table, which is just going to be underneath of your maintain cash flow table. Again, if you want more information on that, go back to the session from last week, but I can set this up such that I can see that information, and rather than export and import and so on, basically use this to kind of in system here say, you know what, instead of that being $9 million, I know that we're going to make for Canada that they're going to have a $10 million payroll for that time period, and I can make that adjustment and make that update like you see there. So I can make those adjustments in screen, kind of just double clicking into the fields and making any sort of updates that I need to there in a more quick way. So this lets you maybe in Central Treasury or as those that are responsible for the forecast, consolidate that information, double click in, and update that. So I save this and commit this to my forecast. So once that's been updated and once we've consolidated the information from those different data sources, now we can then incorporate this into our variance tracking. So we're kind of building up to that ability to start building in the variance tool. The variance tracking tool relies upon the existence of the position snapshot. So I'm going to run this position snapshot. It's something that we worked off of last week as well when we talked about using our scenarios. But within Kyriba, there's a snapshot process, which I haven't linked out here to my workflow. If you're looking for it in your environment, that lives underneath of the process, where at the bottom there you should see something called creation of a position snapshot. And it's pretty intuitively named. What it's going to do is to take the current relevant information that you're pointing to and snapshot it. So basically think of it as like putting it on a shelf. So once I've built this out, again, maybe if I'm building out my forecast or working on that for the start of next year, once I get that to a point in which I need to, snapshot that, I can run this process. And I can have different, snapshots running. I can have different setups for that, as you can see here. But you'll see that if I'm going to kick this one off, pretty easy and standard setup, like everything else in the system, you basically say, well, what cash flow data am I going to snapshot? And I can say it by company or by account. I'm using these different companies that I manage. Again, we're going to look at Canada, Mexico, and the U.S. And there's some other maybe entities there that I manage. And then also the period of time that I'm using for this as well. So maybe I'm looking quarter to date. Mine is always going to run from 10/1 to 12/31. That's going to be based off the period settings, the date settings that we use here. So not too much. You can run this in a schedule as well. You can have the system kick this off. But what I'm going to do is say, I'm done with my forecast. I'm going to go back to my workflow. I brought all that data together. I've got it the way I want to see it. I'm going to go ahead and kick that snapshot off. So now I'm ready to put that on a shelf. I'm going to click that process, and you'll see within a few seconds it'll finish that off. It'll basically create that and put that into the snapshot, which then makes it available to do variances off of. So now I can actually look at this information and track and kind of see how that's evolved from when we originally built this to what it currently looks like, and then also then compare it to actuals thereafter. So if I go back into if we want to start building on a new forecast variance worksheet, similar to the one we had before, we're going to kind of start from scratch here. If you're looking for that, for those that have the forecasting module, you'll see underneath of Inquire, there is the variance analysis worksheet. That's ultimately where we're working off of. Now, as I click into this, you can see I obviously have entirely too many. I have 30 different worksheets that I've built over time. The main one I use here is that Canada, the U.S., and the Mexico kind of worksheet that I use, and that's because it's the entities I manage. But what I can do is we'll just copy this one to give us a little bit of a starting point, but build from scratch. So I'll give it a name that I'm going to use. I go into the setup. When we look at the setup of this, it's going to be pretty similar to the setup and configuration of your cash position worksheets, the setup and configuration of your reports and things like that. It's very intuitive to that, user who's doing that day to day. So as we just kind of walk through the configuration of this, that first tab is what entities am I filtering upon, right? Again, I might just be looking at the main operating bank accounts as I'm doing here. So, Canada, Mexico, and the U.S. very simply have these three main bank accounts that I want to work off of. But of course, you could set this up by the company and group it that way or filter it on that way. When I go to the next tab, though, on the data tab, that's where this kind of all comes together. So as I go to the tab here, what you'll see is that this is saying what snapshot am I referencing? So it gives you, and it says, well, which one of the runs that I have there, I had a few different types of snapshots that I've run. Which snapshot are we going to use? So I'm going to say, okay, we'll use that one. It's called Forecast Variance Analysis Snapshot. That's the one that I've named there. So I point it to that. And then I give it a reference date. What that means is, what is the reference point, the date in which we ran the original snapshot? So let's just assume that as I've done here, I originally, when I ran my forecast and built that forecast, I did that at 12/5/2017. That's the original time when I built that. So that means that that's going to be using the snapshot from this given date here. And so you can see within this worksheet or in the setup that you basically have 7 data sets that you can pull in. So what that means is that you can bring in like 7 different snapshots in over different periods of time and see those side by side, which is quite a lot. We're going to take and extend it from looking at 2. We'll add a third data set here so we can look at 3 things together. So I'll keep it the way it is, and I'm going to say, okay, well, I'm going to look at my original forecast that I did on the 5th of December. I can give it whatever name I want, and I can overwrite that if I want. And you'll see that there's this interval. It says interval here, and it says 0. And what that means is it's corresponding to how many days, because that's the setting I have, from this date will this data set be applicable to. So if I put 1 here, that would mean move it 1 day from this date and look at the snapshot from that period of time. You can see using those intervals, maybe every Monday we snapshot, or maybe every Friday we snapshot. So this will give you the ability to kind of dynamically shift this, if you will. So I can say, look at 1 week from the reference date, or 1 month from the reference date. So we know that we ran this originally yesterday. Some time has passed. We've changed this. What I'm going to do is I'm going to make a new data set where I'll say, look at my updated forecast. I'm not going to look at the current position. Instead, what I'm going to do is I'm going to look at just my forecast. I don't want to look at the bank actuals. I'm going to add my interval of 1, right? Because today is the 6th, which is when I just ran this. So it's going to go 1 day from this date. And I'm going to just pull in my confirmed forecast. I don't want the estimated forecast. I can kind of bifurcate that data. I'll also add a third data set in by clicking in that checkbox. That'll give me the ability to say this will be my bank actuals. I will take out my forecast from that view there, and I'll just look at the actuals. And you know what I'm going to do? I'm going to add it, and it's going to be my current position. So why you would do that, that's your current active cash flow, if you will. So basically, as our actuals continue to come in and as those continue to get updated, it's looking not at the snapshot, but what's currently in the database, what's currently active and kind of growing and changing dynamically day over day with the integration we have with our banks. So what I've done is I basically took in what my original worksheet was, which was 2 data sets. I'm adding a third data set, and what I'm doing is I'm comparing my original forecast, which I used and classified using only estimated cash flows. I'm adding a second data set in my setup where the way I do things, I'm going to use it and look at the confirmed set of cash flows. And then I have a third data set, which is saying, look at my current position, my current actual bank activity, looking at just those bank actuals. So I'll have these 3 kind of data sets there that I'll include. Before we run this, we'll just keep going over here to the right. There's going to be obviously where you set the period of time that this is evaluating and doing its variance off of. In my example, I'm doing it from this date until, again, the end of last month. So maybe I'm looking back prior month, but you could absolutely do this to look at things, say, where am I at in terms of current plan, right? If I'm looking for the month of December, I could have this going out till 12/30 and see, okay, well, where are we at currently as of 12/6 in relation to what we're expecting or anticipating by the end of this month. Additional filtering capabilities are there just like they are in kind of everywhere else in the system. I might not want every single type of transaction in this because there are certain things that we don't forecast for. This will give you the ability to select different types of cash flows in this view. You can select different types of budget codes in this view as well. I forecast only on these things. I don't really care about the other things in terms of tracking my variances, so that gives me that capability there. We'll save this. We can come back in and look at it a little bit more detail, but a couple more changes there. But I'm just going to go ahead and click save. And so now I've created that worksheet. So now that's worked. I'm able to run this, and it's right here. So I'll just go ahead and run this. And what's going to be different is that there's going to be added columns that we'll see here. So let this rebuild. And what you'll see is that no longer are we just looking at original forecast to actuals. We also, as you can see, have the updated numbers based off of what we've updated. So what this is showing me is saying, this is from that snapshot from yesterday, as we know, or the snapshot from the original period of time. And it's showing me, again, that breakdown on those budget codes by those different companies. Then it's showing me that updated set of cash flow of forecast. That's going to be based off of what we just rebuilt, right, and snapshotted. So we know that that's running as of this current date when we snapshotted that, and I can see what those values are. Now, there's a couple of ways that we can do this, but what it's going to do is it's going to show you, well, this is good to see and understand, right, in terms or in relation to, well, how much has our forecast changed? Let's take the actuals out of it. How is our forecast evolving? How is that changing? And you can add comments and explanations to that, just as we did on the earlier piece. Now, as we move over to the column over here, it'll show me, okay, well, here's where we're at with our actuals. And then I can see, for instance, and I can do this one of 2 ways. I can look at this in relation to, as the last delta column here, this is showing me as it tells you, your actual bank to your forecasted original. So it's looking back and comparing the 83 million to what we thought at 102 million, and showing me that delta of 20 million over that period of time. There's a lot of iterations and variations in the way we can do this. So what we can do is, if I just go back into the setup here and click into the pencil, a couple of other things to consider as you're setting this up. First of all, if we go over to the period tab, I didn't mention this, but you can obviously, this is where I noted earlier that you might have different sub-periods of time. Mine is by day, but this is where you can change it and say, you know what, I just want to look at by week. I don't want to look at the daily view. It's too granular for me, too much data. I just want to look maybe at the end of each week and have each subsidiary or each person who owns that go in and actually explain that. So we'll change that to weekly. And then the other thing is on the presentation tab, there's obviously different ordering capabilities here. So I have mine ordered by company, obviously, but you could do it by, say, maybe by bank account or by bank. You could do it by region if you're doing that, regionally broken out by the countries of the different groups that you manage. A lot of ways that you can kind of order that. Using those typical kind of presentation capabilities of Kyriba's reporting, you can note, do you want to show the subtotal or not? There's obviously other things that you can set in here as well. The other thing to consider is that maybe I don't like the layout of that so much, or how things are organized. Keep in mind that one of the things that you can do is in the structure, I could do this based off of what Kyriba calls a budget layout. If you don't know what a budget layout is, think of your cash position worksheets and think of the ability to organize that differently. We know that Kyriba comes pre-canned with a really natural kind of organization. The budget layout, it gives you the ability to create different orderings and subtotals and totals. If you don't know what that is, and if you haven't used it yet, again, we did a training off of that a few weeks ago, and that's on Kyriba Social. You can go onto that and hear how Jamie builds that for our clients using the budget layout. And then lastly, there is the ability to show from a comparison method. This absolute means show me point 1 to point 3, meaning the first data point to the last data point. Instead, we can do incremental, which will show me point 1 to point 2, and then point 2 to point 3, and up to 7 different points there. So you'll see that if I change that, what will happen is a couple of things. So we made a couple of changes here, and what you're seeing is, okay, we know that we had our original, we had our updated, we show the delta between those two. There's our bank actual, which was data set 3, and then we would see here that this is going to show me the comparison of data set 2 to data set 3. Data set 2 being my updated forecast, data set 3 being my actual, and that'll show me the difference between those two things, where we can see my actual is 83 million, what my updated was 70 million, so there's that $12 million difference there. So that'll be the difference being with that. Originally, we were showing the actual to the original. Now we're showing the actual to the updated. That's part of that setting in terms of the presentation. Additionally, as we know, we changed. We're not looking at things by each day. You can see here, based on that drop down, I can go into the sub periods and look at the variances that exist only by each week, or whatever that setting is in those sub periods of time. That gives you some indication in terms of how the options there in terms of setting that up and getting it the right way. There's a lot of flexibility. It's something that you're able to really kind of accomplish a lot of different things with. So think through, how do we do our forecasting? How do we build that out? And then how do I want to track my variances? Is very, depending on how I want to break that down by entity, by account, and how do I want that to line up? So a lot of different kind of options there. So there's a couple of, I'm running a little bit late. This was a pretty dense topic. So of course the recording is going to be available. So one of the questions that came through is, how will the recording be available? I'll get to that, but that's going to be on Kyriba Social. And I encourage you and almost challenge you to go out and get to Kyriba Social, because there's not only this, there's other videos there, 30 minutes of other things that you can do in the system. So I'll point you in the direction there momentarily. And then can you explain how the data reference in the data set, the intervals, relates to the period of the report? I think I understand what's being asked there, and I'll just go back into the setup. There's kind of two dates, if you will, so it does get a little bit confusing, right? Because you think about on the data tab, you put a reference date here. Just think of that as the time that you ran that snapshot, or the system ran the snapshot originally, right? So if you're doing this, let's say that we're locking down our forecast for Q1 of next year. I know by Friday I'm going to run that or have that done. So Friday I snapshot that. So my reference date would be Friday the 8th, right? Then I know a week later we're going to make an update to that. So I could say this week will be, I'll look at 1 week after 12/8, and that would effectively be the snapshot that I run on 12/15, right? And I can continue to do that for 7 more iterations. This date has no relation to the dates in the period. This is just of the snapshot. There might be multiple months and multiple sets of data inside of that whole snapshot. This setting here is, well, what dates am I looking at inside of that snapshot? So it doesn't need to be the full snapshot. I can just say, look at a sub period of time. I know I run my snapshot for 6 months out, but I might only want to do my variance for 1 month out, and I can do that by setting that up there. So hope that clears it up. But yeah, that's how you kind of use those dates interchangeably, if you will. So before we end off here, I just want to highlight a couple of things to, I guess, that first question, which is what's next, right? You guys want more information. You want to see this again. You want to slow it down a little bit and kind of go through it a little bit more piecemeal. So get on Kyriba Social. If you're not on Kyriba Social yet, if you don't know what Kyriba Social is, I highly encourage you to get on there, because not only is it going to give you this recording and other recordings, there's a lot of other stuff on there. Our release notes, I put ideas out there, which I'm sure a lot of you have great ideas that we'd love to hear. Get on Kyriba Social. If you don't have a login, call into the help desk, log a ticket, and they will get back to you with a login for you. They'll give you a login. You'll be able to access it with the URL that you see there and be able to get in and navigate and get to these videos, which this one will be available by the end of the week. So I encourage you to really do that. And if you're wondering about what else is out there, so this is a great kind of 10-week session that we've put in place, and I really appreciate all of the clients kind of joining. We've had huge turnout. If you want to know what else was covered, if you haven't gone to everything or you didn't get into every session, these are the other things that we've already covered. So if you go on Kyriba Social, you'll see these videos. You want to learn a little bit more about reporting, you need a refresher, there's something there. You want to know how to structure a workflow or a dashboard, we have something there. And as we talked about, if you want to know more about the budget layouts and the cash forecasting scenarios, there's, again, 30-minute videos there that you can get started on. So I appreciate everybody joining here for not only this session, but those of you that have been return customers into the Tips and Tricks series. We're going to be continuing this as we look into 2018. So with that, thank you, and have a good rest of the year. Thanks, Elena.